James Anderson. Welcome back, buddy. You're the guy I want to talk to.
Hey, Dale, how's my speaker? Can you hear me?
Yeah, I can hear you clearly. Okay, James. So, James, I want to start with this for people that, aren't familiar with you. James has been involved in the physical metal markets for a long time. Are you going to share your screen? You usually don't,
at some point, but go ahead with what you're.
Well, go ahead. You could do it now, and
Okay.
we could talk.
Sure.
So I'm going to stop sharing. So it's usually at the bottom of your screen.
Yep.
And the name of the company again is
It's sdbullion.com.
SD Bullion. It doesn't stand for San Diego Padres, does it?
No, it stands for Cleveland Guardians. That's what it stands for.
Okay. So are you sharing?
I tried to. It says you cannot start.
I have to stop. All right. I've now tried, buddy.
There we go.
Yeah, I guess the Padres made it into the.
Oh yeah, if you're a Padres fan, it's been a long time coming. I'm a Guardians fan, so it's the same old slay the Goliath of New York.
Yeah, well, think about me. I was a Cubs fan.
Oh God!
As a kid,
you're welcome. By the way,
I was perfectly suited to become a trader. Being a Cub fan.
Well, that's what I know. You learn. Yeah, you learn how to take some lumps, man.
Anyway, speaking of lumps, James.
All right, let's get back.
All right, so first of all, let's talk about. There's a lot of videos out there that are saying the silver is gone. Now you could still buy the 100-ounce bars and this and that. Are they really talking about U.S. coinage, silver coinage? That you can't get, because I know that is harder to get.
Yeah, you have to qualify this. When people start talking about, there being like a shortage in silver, what they're talking about generally, when you hear that nomenclature in modern bullion industry, is that the dealers are back ordered like crazy. And really, when you go into like your local coin shop in your city or whatever, I mean, unless the guy's flush with millions and millions and millions of inventory, and he's one of those people who's kind of wise about the way he uses it. A lot of these coin shops, local ones, have no inventory in the shelves. So you walk in there and you're like, what the hell? And the only way to get your metal, if you go that route, is just to have them back order and order with the wholesaler. And then you got to trust them and wait on it being delivered there. It's very similar with even online dealers who don't have a lot of inventory or who aren't well capitalized. You all of a sudden put an order in, and then it takes months, and you start griping and complaining. And anyways, those are like the telltale signs.
So my last delivery took a week. That's not bad, and they said it had to come from the mint, which means they didn't have it in inventory either. They were just Buffalo rounds.
That's pretty good. That's pretty good to find rounds right now, because rounds are that's one of the hardest things to find.
Yeah, because I mean, let's face it. If you're ever going to need them, what are you going to do? Go out, pick up like 1,000-ounce bar, get a hernia on the way to whoever is selling tomatoes, and say, "Here's a 1,000-ounce bar. Can I have all your stock?" So it's not practical. Go ahead.
The shortage, then that word, it has various meanings, and it depends on what you're talking about. The ultimate shortage is the expectation that there's going to be a massive inflow of both, buying
demand.
Demand in silver, and probably bleeding into gold if things get crazy enough, where you could end up having a shortage, not merely in the retail market. I think that's a given. When you eventually see a retail gold bullion shortage of delivery and massive premiums, it's not there yet, but that can come. And I would expect it to, because the first half of this crisis, the 2008 global financial crisis, that happened. There was no gold to be had, and there was no silver to be had on various days in the whole.
I heard it was that way in the UK after the gilt fiasco.
Oh yeah. I mean, if you think about how pathetically tiny those industries really are in comparison to the amount of capital out there, and when capital gets scared and it wants to run into something quickly, it takes nothing. nothing to just take all that stuff off the shelf. But we're talking about the bigger stuff. We're talking about now, the 1,000-ounce bar for silver, and the 400-ounce bar is being melted and turned into kilo bars and flying off to China like they've been doing lately.
Okay, okay, so we've kind of addressed the supply side. There's other things to talk about on the supply side. You know what I'm interested in is I'm not sure of the country in Africa that Putin has influence, control over, where it's basically all the gold from that country. Is it in Sudan?
Yeah, you saw the CNN report on that. That was a really good. Yeah. That was a well done report.
Okay, so is that where the selling's coming from?
That's part of it. I mean, in terms of that's where, that metal that's going from, say, Africa, most of the time, those countries, it's going into places like Russia, where Russia has control over certain areas. It's also going to China.
They're giving them arms and supporting the government, and those troops are just ransacking the mines and shipping it to Russia.
Yeah, that's more or less how blood gold works. It's basically, that's
okay. Blood gold, like blood diamonds. Okay.
Yeah, that's the idea. A lot of times, the London Bullion Market Association will walk around and paint this pretty picture that blockchain is going to somehow snuff that out. That is the most ludicrous, idiotic thing ever. Blockchain's not going to stop that. The humanity is just, that's the way it is. There's certain areas of the world that are desperate, and where strong men run the show, and they don't care about anti-money laundering rules, okay? And they don't care about your blockchain, all right? So yeah, so yeah, and if you look at, like, for instance, Dale, the Amazon, the Amazon in South America is the size of domestic 48 states, right? In that area, that section of the world with Venezuela now, they've been mining the hell out of the bottom southeastern portion of their state, their country, for a long time now. And that's helped prop up their military dictatorship. And now the United States is so desperate, they turn and pretend like everything's fine with Venezuela. It's time to do business again, I guess. But that's not going to stop.
Okay. And the selling in, let's talk about, where do you think the selling in silver is coming from? I looked at my chart, and I was disappointed with the action last week, because I've been looking for a weaker dollar to actually be supportive and generate some energy to the upside in the metals. And it happened.
We're just backing and filling still. Really, Dale, we got to get over 22 and have like a real impetus and a reason. There's got to be a underlying reason, like this thing that Yellen did last week. That was pretty crazy. Within 24 hours, she's talking about how everything looks fine and she doesn't see any problems in the markets. And there's chaos going on in the markets. She's just lying to everybody. And then.
So do you think it's all about yields then?
It's all about the fiat Fed. The U.S. dollar is running the show. It's been running the show all year.
Yeah.
So that's still in play. And so,
well, then why, when the fiat dollar weakened, and it's off its highs pretty good, James, here, but about 300-400 points. Why is gold and silver selling off with a weaker dollar here this week?
Just go and look at the Comex. Go and look at that. That really dictates most of the price action day to day. And go look at the what's happening there. The volumes are pretty low. How strong are the longs? What you really need is the long side to really get aggressive and start and have a reason to get aggressive, knowing that they can momentum trade it up to 26 and take profits, et cetera, right? So that's coming. It's just a question of impetus.
I still think the reason's got to be the dollar.
Yeah, I do too. I think Dale, it's when you look at Exeter's pyramid, John Exeter's pyramid, the upside down pyramid, it's always been the very bottom pinnacle is gold, and everything still rests on that underneath. And that, above that is the fiat US dollar. And it's still pretty powerful. As much as people want to doubt it, the system is still strangling basically the financialized. We are in the most financialized system globally of all time, right? The financialization, it's still dictated by the US dollar mainly. And so it's not surprising. Ultimately, though, the US dollar, fundamentally, if you look at it, it's long term, it's bearish. So having gold and taking advantage of this short term weakness is the play. And if you're very aggressive, then you can use silver as well.
Okay, and what do you think about the ratio? We failed from the 50% level and sold off under 83 and then came back. We're still under 50%. I know last time you were pretty much bullish the gold silver ratio and felt that gold was going to lead it, but that was a pretty big turn that we haven't negated yet. Have you changed your view on that?
Yeah, I saw it pop to 90 last week, and I'm not sure if it's still there. In the short term, it could go higher. Again, it could back and fill. I'm sure if I looked at the chart, it would look like it could back and fill even higher still.
Okay.
And the gold silver ratio is important in the sense of knowing the overall medium and longer term direction that this could go. And when you look at that chart, I may as well just yank it up since we're talking about it. It looks like it's on a downward trend overall, but it could fluctuate and take forever, in doing so. But that spike up to 130, during the COVID era, that was absolutely
never see
insane.
that again. Yeah,
I don't think so, unless the entire world falls down a derivative imploding, nightmare. It's unlikely, right? I mean, look at that, and then just look at that channel it's creating, right? I mean, that channel it's creating is calling for something like this when it finally does go bullish for silver back toward 50, right?
Yeah, I'm thinking that 40, 45 is a possible count.
Yeah, because I mean, look at how stupid it gets when it starts going. I mean, it can go really aggressive, right? In 2010, 2011, it just falls off a cliff back toward like 30 low. And for me, the long term for this, silver and gold bullion bull market that's the target. I mean, once you get near there, if you're someone who's bullish in silver, whatever, you need to take profits, right? You need to start taking some money off the table and looking for other things.
Well, that's when you sell your silver and buy gold.
You could do that. Yeah. I mean, if you have a good relationship with your local dealer, that's not a bad play. It gets a little complex if you're dealing in bullion because of, capital gains and all the other things, but it just depends on how you play it.
Okay. So let's get back to supply. You were showing something about open interest. I was reading something about it was about the lowest amount of silver in the warehouse registered.
I mean, this guy Michael, he's been putting up these charts. Michael Say 98 on Twitter. He does a really good job. He's a good follow because he follows the Comex silver flows in and out. He follows the London warehouse flows in and out. He makes really simple charts. So if you follow him, it'll pop up on your radar every day. He also follows one of the other competitors that we compete with, which is one of the largest retail dealers. And he's got algorithms looking at it on a day-to-day basis. So he can tell just with his algorithms on a day-to-day basis and their inventory numbers, how good their sales are versus how long he's been tracking it for like 2 years now. And so, I mean, just last Friday was one of the biggest sales days in the entire industry in the last year to two, because of what Yellen was doing all week and the way the markets were looking. People are realizing, the turn is coming. So if you are sitting on sidelines waiting, you may as well get your stuff before that happens. And so that's why that rush, I think, occurred, as well. The spot prices just being, dipping. Whenever the people who are dollar cost averaging, they just come in and they bring capital and it takes all the inventory off the shelf, and it's a repetitive cycle.
Those Wall Street silver guys just posted something interesting. I mean, Credit Suisse made the news a week or so ago, and then
selling off.
They did have to fire sale some assets and say, and that's what I brought up. If the Fed keeps embarking on this, especially at this accelerated pace, that they're going to have to bail out the world.
Well, if you look at the way that the credit default swaps are trading in Europe on not only Credit Suisse, but Deutsche Bank and a few others, they're all rising. And there's all these contingent liabilities and concerns about derivatives that are held on their books. And Lord knows what could happen if one of them really does fail. And all the supranational laws that were agreed on by the G20 in late 2014 call for no more bailouts of these commercial banks, these global systematically important banks. Credit Suisse is on that list. So theoretically, they can't bail them out. Theoretically, they're supposed to bail them in. And so if you had that happen in not in some far off satellite country, but in proper
Switzerland,
if you have something like that, then you know the dominoes are starting to fall.
Okay.
You know, I mean, it's just one of those
So
things.
it would be a bail-in for the depositors of Credit Suisse and
Right, the unsecured
every
deposit.
other bank, and maybe in the U.S. it has some type of exposure.
You're right.
You think that?
That is the worry, right? Is if they have, because in those laws, it's the winning bettors on the other side of the derivative trades they're first in line creditors, even ahead of their highest creditors that own their bonds, right? So in a bankruptcy proceeding, they're going to be first in line. So whoever has the winning bets, so it's one other commercial bank could take them over and get them for pennies on the dollar, right?
Yeah.
That's basically how that works. So yeah, anyone who's an unsecured deposit holder there, I mean, you've seen headlines of wealthy individuals flooding out of Credit Suisse, understandably so. And so, yeah, I mean, that is happening, and it looks somewhat similar to 2008. It just keeps creeping and getting escalating and getting louder and louder, and then one day, bam, somebody fails. That's just the way it works.
And everyone thought it'd come out of the weakest part of the European banking system is Italy,
right?
And yet it's coming out of what would be considered the safe haven of Europe.
Yeah, well, that's what happens when you, for the last 12 years, you use mark to model, and you basically say, general accepted accounting principles don't apply anymore because we're in a crisis. And so, yeah, I mean, you basically just make up anything. This pile of dung over there is worth this, and you just put that on your balance sheet, and everyone says, okay, and you just look the other way and keep going. And then one day when you say, no, it's not, and this bankruptcy is real, that's just kind of how it works.
Yeah.
So yeah, I mean, overall, what you see in gold right now, just so you understand, when there's a movement that happens in gold that's typical. When the price falls off like it has this year in spot price, a lot of the ETFs have major sales. The algorithms sell off. You have massive amounts of GLD and IAU being sold off, et cetera, et cetera. And what ends up happening is a lot of the gold gets pulled and yanked from those exchanges and moved to Switzerland, typically re-refined into 32.1507 ounce kilo bars, and then shipped off to China a lot. And so what you see is the Western paper holders selling and the Eastern physical buyers buying, and then there's huge outflows of gold that happen. And so we've been seeing a lot of that lately. China, India, Turkey, those have been the main buyers. And just overall, that's been the case really since the global financial crisis. I mean, since the global financial crisis happened, and in 2009 when Tim Geithner went over there, I'm sure China told him, we have too much dollar exposure and we're concerned about you devaluing the dollar. And so they probably came up with a tacit agreement to allow them to swap a lot of those dollar IOUs into Western gold. And that's what happened. Massive amounts of Western gold flowed out east throughout the 2010s.
Yeah.
And so that's why you had just a huge amount of gold that went to China and India, and obviously Russia did a lot of buying as well.
What did you make out of the story about the Vatican repatriating all their assets to the Vatican Bank? I think it was that it had to be there sometime by, I don't know, late September or something. It was actually a papal decree to do so. Do you know about that?
I did not see that story.
Okay.
I did,
but we'll talk. Let me know later what you think about that, because they probably have pretty good information sources.
You would think.
Don't you think? You
course.
Just go right to the Lord. And
you're talking about one of the most powerful organizations if they chose.
Yeah, I mean, do you think the Vatican is a stronger bank than Credit Suisse?
Oh, who knows what's actually on their books? But I mean, they have billions of people.
They've been in business a lot longer.
Yeah.
Anyway, lowest level on. Okay, so
this is in London. Yeah.
Okay, and is this silver or gold here?
This is silver, and this is an important. This is an important thing to watch.
There is going to be a squeeze. There's got to be. It's not if, it's when, isn't it? With all these fundamentals.
Precisely. That's the point. And people get very cynical because they've been beaten down in the 2010s.
Yeah.
When the financialization was still in full on control.
Yeah.
They've been beaten down in the sense of, you know, oh, they'll just control the market forever. That's not how that works. It's not how that
Yeah, I
works.
get that all the time when I'm
Yeah.
bullish from people. Yeah.
Right. I mean, it's like going back in the 1960s and saying that, you know, like, oh, gold's going to stay at 35 forever, and you know,
Yeah.
or coming back to 1975 and gold's at $100 and throwing the towel. And you know, there's been so many times where people do that.
So you have bearish sentiment and you have low supply.
Mhm.
That's a combination. You know, if we go to 1650 and here, and let me just share before we wrap up here. I just want you to take a look at this, James.
Okay.
So
Go ahead.
I'm going to share this silver chart here. It's a weekly. And last week when I became disappointed with the action in silver after, you know, couldn't rally with the dollar weakening,
Yeah.
you know, I bought this first break to 19. You know, I got long here, was a decent ride, just like this was a decent ride. But what you're talking about getting worn out,
Mhm.
I'm starting to feel that, because I thought, well, maybe 2 drives were enough and we're going to go. And it didn't happen. But now it looks to me like this is a magnet,
Yep.
just enough to flush out the longs that tried it here, just like from here, it was enough to flush out these guys.
Right.
And now we get one more to
Mhm.
take out these guys. And you already have, like, you know, only 20% bulls in silver.
Yep.
So if we do this, I'm a buyer.
Yeah, that's you know, that's highest probability. What you're showing me is it going down.
Yeah.
It's like, so yeah, I mean, 17 is the floor of late, and so no doubt that would be the time to buy and at least
You
go
know,
for
some
rips.
Yeah, maybe we go 1650 on an extreme, but I think the next break could be the final one, and maybe all the fundamentals that you and I are talking about on October 18th, 2022 begins to develop, and people look back on this time frame and realize it might have been the last bus
And
stop.
one other thing we didn't even talk about was last week. I mean, you saw European Central Bank and the Swiss National Bank on the New York Fed data needing you know, U.S. dollar swaps. Like 10 billion went to Switzerland. What do you think that's for?
Yeah,
X
that's
billion.
what I mean.
X billion went to the ECB. I mean, there's problems in their banking system, and this winter you could literally have a bankruptcy in the banking system. I mean, it's a huge domino that could fall. And so, yeah, this short-term stuff that we're talking about, Dale, is, you know, cool for someone who's trying to make a short-term profit or a trade. But if you're looking at this on a longer-term perspective, I mean, we're getting up to it. We're getting up against it. We're getting closer and closer to this thing really, the dominoes start to fall and the fundamentals actually mattering.
And you know what? Wouldn't it be cheaper and more efficient for the Fed just to join Japan and the UK, our allies, and come in here and help them with interventions to, you know, a reverse plaza accord instead of sending these swaps and basically guaranteeing losses with these banks?
You would think the question becomes, like, ultimately the dollar is the empire's strongest lever. I mean, right now it's what gives them the most leverage in terms of the agenda globally. So the question is really, what is the agenda? What do they want? What is the actual power behind the United States? I think, what do they want in terms of influence in the coming decades? And that's a question that, you know, how are they going to play this? But yeah,
I think the days of getting what they want are drawing to a close because of the world we're in now, and all the moves to de-dollarize. And you know what could be a death knell is the U.S. overreacting to the Saudi cut. And if the Saudis start pricing oil in yuan as well as dollars, that's the end. And in the dollar, would you have a failing rally here, James? So
yeah, if you have a failing, that's ultimately what's going to propel this next level of the bullion bull market globally. It's when the fiat US dollar goes back into a kind of a bear market phase. I mean, we've been in a bull pretty much for the fiat dollar since 2015 to now. I mean, obviously, if you look at the relative charts versus the other fiat currencies, it's been going up, you know, 7 years on.
Yeah, they've been having bull markets in bullion.
I mean,
right? If you own gold in yen terms, you're doing very well.
Of course. Gold's doing what it does, and just wait until you see what happens when the dollar starts failing and the financialization starts showing what it's done. It's masked the truth. The truth is that gold's going to be much more valuable than fiat USD, and any other fiat damn currency that's out there. And silver is going to take a fun ride with it.
Okay, so I'm going to do this with you live on the air because I think it's so important for the next several years. So everyone who's stuck around is going to see this right here is the blue line of death for the dollar.
The 104.
Back under 104.
Yeah.
And,
I mean, and Dale, it could go higher. I mean, I've heard.
Yeah, it could.
I've heard good cases for it, and it could
just
happen.
like silver. Yeah.
Yeah. Go ahead.
But right now it looks pretty lousy.
Yeah.
Okay. I mean, you know, this was a CPI, and we failed on a stronger than expected CPI, where they're talking about the Fed going full point in November. So right now, this is the first potential failing rally in the dollar we've had all the way up. But so it could be a correction.
If you get a rush for liquidity and a bank failing, you could have one more spike in this DXY. That's the one point.
Okay. Okay. Caveat well taken. James, the best way for people to get in touch with you, and do you work with people to help them,
of course,
get prepared with gold and silver physical?
Of course. So sdbullion.com is our website. We're a top 3 retailer of physical bullion products in the United States. And if people want to follow my work, our SD Bullion YouTube channel, I do a weekly bullion market update. It's typically like 10 to 15 minutes, kind of quick, hard
very
hitting,
good.
A recap that's focused in bullion, not necessarily anything else. I mean, we go kind of macro on a lot of things, but that's a free thing that you can follow. We do it on Friday evenings. So YouTube, SD Bullion YouTube channel. And then on Twitter, you can find me at James Henry and that's my Twitter handle.
So, great conversation, James.
Yeah, Dale, it's good talking to you again, as always.
Yeah, so my trading warrior brother, James Anderson, everybody. Follow him on Twitter. Stay in the know and under the surface stuff that's happening in the physical precious metal market. All right, buddy. Good hunting.
Yep. Thanks,
all right,
guys.
We'll talk in the winter.
Of course.
All right, buddy.
All right,
that's it, everyone, for Turnaround Tuesday. And you can join the team in 15 minutes on the Morning Edge. Remember, don't just count your silver coins and your bars and whatever you prefer, even a Bitcoin. Count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.